Hello, everyone. Happy Taco Tuesday. How's everyone doing today? Guess what I'm having for dinner tonight? Tacos. Good morning, Sterling. Good morning, Patrick. Good morning, Bull Strike Cheetah. Just press the sell button and everything will be fine. Well, we can get a really nice bounce coming up at some point. Then it'll be time to press the sell button again. We had Redbook coming out 5.7, dropping from 6.6. We had NFIB Business Optimism Index coming out at 100.7, down from the prior, just below consensus, but not a big miss there. What else do we got? What else do we got going on here? Good morning, McRangers. Finally. Agricultural SEC, Chinese-owned farmland, national security risk, especially all the farmland that's owned near military bases. Why would you be buying that? I don't know. What else is going on? Good morning, Eric. Good morning, John. Putin knows Ukraine's terms won't be met. Well, we'll see. We'll see what's going on. Good morning, Jacob. We got some minor earnings. Thank you for putting in those. We've got Kohl's, which was a beat. We got Sticks, which was a beat. And they guided down. Lots of not good guidance going on. Lots of not good guidance. But other than that, we got to say good morning, PMG. How are you doing? Thank you, everybody, for tuning in. Lots of people tuning in. What else? Wasn't major worth earnings. Let's just get straight to it. I'm really going to be focused on the JOLTs coming out at 10 Eastern. 10 Eastern openings and quits. To see we could get a market reaction of that. That's really all of note. Remember, we're also in the quiet period for the Federal Reserve because we have the rate pause next week. So today, not much. It's really only up next is JOLTs, but this market is incredibly oversold. We have a little mini double bottom patterns, some which have triggered. That's the only thing. And again, when we're now below the rotation zones, I do not get aggressive with targets because we could bounce in the rotation zones and rotate back down until we form a longer bottoming pattern unless we get a V-shaped spike, momentum spike. Tomorrow, remember, we have the CPI numbers. So that's going to create some more volatility tomorrow. The market map this morning, mixed with the mega caps, telecoms getting hit right now. Disney, Netflix also down. But overall, you got some consumer defensive also down. If we look at the groups, let's just refresh this. We have energy and basic materials, consumer cyclical leading, and comm services definitely dragging some things lower. Other than that, we have Fed Watch still has 3 cuts priced in. Still, next week we have the Fed meeting. It's a pause. And May is still right around 50-50. Even though the Fed has been stressing that they're going to pause, we'll see. We'll see who's right and who's wrong. But again, next week is 97%, so we're in pause. It's going to just be important what Powell says. We're still in extreme fear. And with all the sell-off, the Schiller PE is only back to 35, 34. Longer term, this thing has to get down below 20. Below 20. Keep that in mind. Longer term, it's not going to get there in a day, and we're going to get rip-your-face-off rallies. Especially study the NASDAQ in the dot-com bust, where you got massive rallies and everybody's saying, oh, the bottom's in, everything's wonderful. Everything's wonderful because Trump bought a Tesla, and now you have JP Morgan coming out and saying, oh, 200, then 800. Based off 2030 projected earnings, it's cheap. Okay, all right, whatever. By the way, here's where we sit. We definitely took out the first target of the double, was finished. The first target not yet to the second or third. So could we easily go lower? And people are like, the market's is cheap now, buy the dip. We're not even back to where we were with the August sell-off. We're back to some support areas, but this market's still not cheap. Market's pricing in a recession, but saying the market's cheap with earnings. No, it's not. You can't have it both ways. Who else is here? I am blurry. Hold on. What is going on? Let me see this. Let me see this. What is going on with my... I'm looking at my other screen to check the... That is... Let's do something real quick. Let me try this. Hold on one second. Let me just switch. There we go. No, I'll have to work. 1 second. Let's try to fix this. I don't know what happened. That is really weird. It's not letting me adjust the... we're going to have to deal with blurry. Huh. I'll have to work on that after. You're going to have to deal with blurry mic today. It's not letting me fix that. Huh. It's not letting me fix any of the settings. So, sorry about that. Yeah, it's blurry. Don't worry about it. We'll have to fix it later. Sorry. Yeah, witness protection. Hello, Charles. I did. Good morning, Tony. Good morning, Heinrich. What else? Good morning, Anissa. I did not spit on the cam. The cam is clear. I don't know what it's like. It's out of focus depth. Out of focus. But it's not letting me focus it. Oh, well. So, blurry mic. Oh, you're funny, PMG. Okay, so what do we have? We have a little mini triggered, a 1 hour double bottom pattern. Really, it could also be a 15-minute. You see it here, and it does technically qualify. That's the only little potential bullish setup. That's the only potential little bullish setup. The still stop level is if it closes below 55.89.50 is the worst case level, or trades through 55.79.25. You are into a little clear path move with the breakdown zone near the second target. But that is the only, and this is a minor one. Why do I say it's a minor? Because look, it's right against that 4 hour rotation zone, which we've already tagged off. And easily, if it were to trigger, it doesn't even get it back to the daily rotation zone. But really watch this 4 hour rotation zone and pay attention where the invalidation point. Because this is a minor pattern. We could come back down and make a more significant double bottom pattern. All right. If we take out yesterday's lows, the next target is 55.27, and then the next key thing, we did not close above the 62.5 yesterday. The next key thing is the 75. The 75% harmonic. So, will you not see back? The 50 the death crosses do not test out very well. They generally trigger something the other way. Okay. Michael Blurry, thank you. Yeah, all right, you're fired, Ted. You're fired. Let's see. We did not close below 62.5. All right, and we're getting some divergences down here with the RSI. Getting some divergences, so running out of momentum to the downside. Okay, but again, your major level, even if we complete this double, you know, it just takes us back to the 5700 area key harmonic cluster and the declining daily rotation zone. Even on a stronger rally, it takes us into the rotation zone, and we could even kiss the 200 goodbye again. What would, again, besides short-term plays, what gets us in more sustained bull mode? It's all the way back at 59.38. Long way off, even if Trump buys 100 Teslas. So, the NASDAQ did close below 62.5. The NASDAQ does not have a little mini double. There's no little mini double. So you can't use that for any targets. The only thing you can start doing is if it starts trading back above 19,600, it is in a clear path move to possibly 19,800, 19,820. Your key pullback levels, I'm going to be watching. Well, the key pullback levels I will be watching going into the open is 19,362 and 19,306. If we close below 19,306, then I'll start watching for a bigger potential double bottom pattern. And also, we're against right to that 4-hour rotation zone, which was very key. Look at the 4-hour rotation zone over the last few days. So, in order to get above there, it's got to get back above 19,900. Okay, to the downside, the next key target is 19,023. And then the major target now with the probability shift after we'll probably get some kind of bounce before this is 18,452. The Dow does have a little mini double that's also officially triggered. Again, these are not the strongest patterns. But if it closes back below 41,831 on a 1-hour basis, it's off the table. Or if it trades back below 41, about 770, it's off the table. Other than that, that's the only pattern I have going into the open to the upside. And again, pay attention to these 4-hour rotation zones for anything going on. It's really got to get above the 8 EMA. The breakdown pattern or the pattern into a single candle clear path move, the target's around 42,400. To the downside, hold on to the downside. We got to take a look at this because this is a big weekly pattern, so we're going to have to watch where the Dow closes this week, but it's confirmed the massive double top. And if it triggers, it could take it back to all the way to the weekly 200 and this 38,200 area. That's something we don't want to forget. The Russell also has a little mini double bottom, really nice formed. Again, same thing, not of the highest probability since it's against the rotation zone, but that still is completely valid. So the Russell also on the daily closing level is 62.5. So over the next little bit, meaning weeks, we could easily see magnet prices of 1942 with an 1848 longer term. Trading at a very key support level, though, right now in the short term. The VIX still elevated. Start watching if VIX can start dropping back below 27, we could sustain more of the bounce, at least through today. So that's what I'll be watching on the VIX. The DAX still closing within the rotation zone, but closing below 62.5. So I'll be watching for any bounce plays for rollover plays to at least retest the low area from the last week or a couple weeks ago. Sorry, back at the end of February. The notes now have a substantial potential double top. If this were to trigger over the next little bit, okay, I'd move the targets to the conservative side, to the right side. The trend is still up, although it's weakening here. So that's the thing that I'm keeping an eye on. If it closes back below 110.12 and a half, and we could get the pullback easily to the 62.5% level. So that's a very interesting pattern. And on the yield, we had the little minor pattern, which hit the first target and then rolled over again yesterday. Now we have a major pattern, potential. We need the yields to close back above 4.342. We're against the 200 area and against very, very key support. See that right here, against very key support. So on the yield basis, a close above 4.342 triggers the double, and the daily rotation zone would be out of the way. The targets for that would be 4.43, 4.48, and 4.53. Now, let's just take a look at one thing, because the yields, and we're going into the Fed meeting next week. Hold on, my levels are off there a bit. Going into the Fed meeting next week, and let's see, oops, come on. I'm blurry and I can't click right. So the bigger bounce play, that would take us between the 50% and 62.5 harmonic. So does that mean it would shift the probabilities necessary? No, that would be a little recovery bounce play overall. Dollar index. Going to also be watching with very oversold conditions. Going to be watching for a bounce here. Is there a good setup yet? There's a little, again, a little mini double. Not the strongest pattern on the 1 hour, but it could be lead to a little bounce right there. And if it then followed through, and it would have to see tomorrow if this were to close above today's high and if the percent B was still valid. Crude, we do have a potential double bottom here. Again, these potential double bottoms, besides the ones that have already triggered on a 1 hour time frame, these bigger ones like these daily ones might not trigger. However, that's the only bounce pattern I see at crude against a very, very key support level. You see going back. We found support here at the end of September, support here at the end of October, middle of November, and beginning of December. And now we're testing those key levels. And overall, we are weekly cycle bottoms and very oversold. So that's a potential bounce play in crude against the rotation zone. But I will be watching to see if this triggers above a high of 68.22 on a daily closing basis. We're not close to that yet. That's the key thing. And on a little bounce move prior to that, the key level is 67.12 to watch for it, like if we get a 4 hour close above there. Gold, little pullback play yesterday and a little bounce recovery play. So, again, now I'm going to be watching to see if gold now takes out this, and this sucked people in on the short side, and now if it goes, because remember, it did not hit double top territory. I'm now going to be watching if we re-break above about 29.30 and it got some people shortened and snaps out the other side for a shake and bake. Yen continues, well, today it's weakening a bit after strengthening a little bit yesterday. And stair step down, little sloppy double here. That's pretty much first, second target's already hit into very key resistance zone. That was the only thing that's not a long-term bottom play just yet. But those are exactly what I'm watching for because you got the overhead rotation zone. So cycles at the bottom, we could still a little more of a bounce. Then I'm going to be watching for a potential longer-term bottoming play here because we have not closed below the 62.5. If we turn around and close below the 62.5, then I will definitely shift to a stronger yen for longer. Euro, which is still marching towards the next target, 109.55, and then potentially 110.85. After just pausing here for a couple days, moving sideways, now moving back up. Excuse me. So, spiders coming down, hitting the first target area. And see here on that weekly double. That didn't officially trigger on the weekly, triggered only on the daily, but hitting that first target with cycles getting the bottom and very oversold. So I'd be watching to see how that, if you're trading the spiders, watch to see how those futures play out with that double. If it gets invalidated, I'd watch for a stronger bottoming pattern in the spiders. If it triggers, we could see a little bounce there. First target is 560.58, and then your major area, your two major areas are roughly to 567.50. Then you have 572.50 and then 575.60, since we don't have a double yet on there. The Qs, after hitting the second target on the triggered weekly. Okay, we still have 460.25 below, but again, we can easily bounce before then. The key levels on there were above yesterday's close, so on any rollover play, 472.73 is key. On any bounce play, I'm paying attention to yesterday's open. 483.45, and then Friday's close coming in at 491.79. And those levels also you see would take it back to the 4-hour rotation zone area. You also have, the Morgan Stanley note, JP Morgan note out this morning. Tesla also very oversold. We still have the magnet price lower back to the 180s easily and the overhead resistance, but it may get another bounce off of that with the headlines that are coming out this morning. The key resistance now is back at 265. NVIDIA also continuing breaking key support, coming back to the bottom of the channel line and a little harmonic area and the 75% harmonics, and trying to get a bounce here. But any bounce play to me is very key resistance back to 115. Broadcom, just a sloppy mess against the 200, but trying to find some support in here. The key resistance area is now 195. Apple yesterday finally officially reconnected with its 200. Last time it did that was back in May of 24. And now a continued little gap lower, even below yesterday's low. The key level to watch on the closing basis for Apple is 220 over 04 for the 62.5, and to trigger. This is still a valid double. To trigger the double, which means continued pullback in Apple, is 219.38. You want to look at XLF sterling. There is a massive double top on the weekly basis. Where could that potentially take us? That could potentially take us all the way back to the key prior resistance becoming support level back from May of 24. But that's something to keep an eye on also. It's not confirmed or triggered yet. But that's, yes, in doing your analysis, you are spot on there, sterling. All right. What else do we have? What else do we have here? We got Amazon. Amazon, the key level is 185.70 on a closing basis. If you're looking for any bounce play in Amazon, pay attention to yesterday's high. If we turn around and close above that, it could be a bounce play back to. These are bounce plays only. They are not anything to get greedy on. Because you're against, look at this. On the weekly, it's probably going to get the first cross of the rotation zone. We don't trade that. We keep that in mind to stay on the right side and help us manage reward to risk so that we don't get greedy. On the daily, on any bounce, and that was a week, sorry, that was the weekly. Here's the daily percent beat by yesterday's high. I was looking at the weekly. Against the completed wedge pattern. So pay attention again, yesterday's high, and that would be a potential bounce play maybe to just above 200. So, all right. That's about it right now. We'll check back in. Again, this pattern's not invalidated yet. So it's just barely triggered. Pay attention again. I'm going to just tell you something. Pay attention to 4-hour rotation zone. It starts trading back above this 5650. We could then see a quick run, potentially of 5700 area. So that's where we stand. I hope everyone has a wonderful, wonderful trading day. I'll see if I can get this camera all fixed. Don't know why it's blurry. And hopefully everything will be back in line for tomorrow. With that, I shall talk to everyone later. Bye for now.